Well, this week, online travel company Webjet said it's back in the black after it lost $60 million in the first half of last year. But as Chief Executive John Guscic told me this week, it's been a long climb back from an almost terminal position when borders were closed and the travel industry had pretty much shut down. John, many thanks for your time. Can you contrast your business today with what it was like in your mind 18 months ago?
If we went back sort of 6 months beyond that, it was obviously a complete disaster. We had a business that was turning over circa $4 billion in sales, and that went to zero in the space of 3 weeks. And you've got a cost base of circa 40 million, and you're running out of cash. That was high stress. And as you're aware, we raised an emergency capital raising and refinanced the business, which was positive, and it was great to see the support we got from all of our major shareholders in that endeavour. But we get to 18 months, we're starting to see that we've sort of bottomed out and there's just minuscule recovery in very, very small pockets of the market. And what we've seen since, obviously, is a rapid recovery, and we've been a beneficiary of some of the decisions we made during the pandemic to retool our business to enable us to grow and hopefully thrive in the new environment.
But it seems to me that just looking at the Bureau of Statistics numbers, that the level of inbound tourists and outbound tourists in and out of Australia is literally only a little over half what it was previously. So does that mean there's more upside to come for the business?
Australia is actually a laggard in the recovery from an international inbound and outbound perspective. There's, as you just rightly identified, there's only 50% of people coming into the country that was coming in pre-COVID, and 50% of Australians who are leaving compared to pre-COVID. On a global basis, that looks closer to 75%. Now, our business at an activity level of bookings across both our OTA business, which Australians will know as webjet.com.au, and our web beds business, which is a wholesaling business, our business, we're already at 100%. So we've recovered a third better than the overall market. And the best part of that recovery is it's accelerating. So in the current quarter, which is our Q3, which is 6 weeks old, we're up now 30% ahead of pre-pandemic numbers at both booking and TTV. So for our business, what's happening in Australia is important, but it's not the driver of the overall success that we're going to have, because we're a global business and the vast majority of our earnings occur outside of the shores of Australia.
Okay, so how much of that is volume? In other words, numbers of people coming through versus how much is price? Because people are conscious that airfares, the price of hotel rooms, has gone up significantly over the last 6 to 12 months.
Every travel business in the world has what you've just described, except for us. We are an outlier because we've changed the mix of our business. On a global basis, we're selling a whole lot more domestic, and we're selling a whole lot more in North America. The length of stay for those hotel stays are substantially shorter than what they were pre-pandemic for our mix of business. If you just check a hotel room on a typical room night, you're talking 20-30% higher now than it was pre-pandemic. But for our business, we're actually down, believe it or not, 13% on an average booking value. That's because it's the length of stay has been shorter because of the nature of where we've pivoted to as a consequence of decisions we made in the middle of the pandemic.
Okay, so then take me to airlines as well, because you deal with them.
Sure.
Tell me about their decisions, because clearly this is about capacity.
Yes.
Many of them are beyond capacity right now because they've taken flights out of the system, and prices have risen accordingly.
Yes.
Is this the right strategy long time? Because at some stage, consumers, surely travel consumers, have got to reach a brick wall where they say, we can pay no more.
I think if the question's in the context of the Australian travel market, it's 100% correct that the constraints and the supply constraints that the airlines have put in, and that's not a factor of one particular airline, it's a factor of some structural elements. So if we roll back 3 years or so, the Chinese airline carriers contributed roughly 20% of the outbound capacity in Australia. That's zero. So you've lost that anyway. And then the balance is just starting to come back out of hibernation. And as you're well aware, the supply chain issues that the airline industry has are very difficult to overcome. You have to basically retool your entire operation from a standing start. that's taking a little bit of time. But I think over the course of calendar year 2023, you'll start to see increased supply, and you'll see prices come down as a consequence of those increase of international capacity. And once more international capacity feeds in, the domestic capacity will also rise. And I think the bite that we're all currently feeling on domestic prices will be subsiding.
I'm wondering about the travel industry and the lack of Chinese tourists. Just what does it do to the travel industry if China starts to re-engage with the world and sends its tourists back to places such as Australia?
In the simplest forms, if the Chinese outbound tourism was to kick in and Australia became an attractive destination, it'll end up being lower prices for you and me. That will be the end effect of all of that, and it'll create great stimulus for the travel industry itself, and we'll go back to full employment for hotels, tours, activities, airlines and the like. So it'll be great news if that détente was to be achieved.
John Guscic, many thanks for your time today. Appreciate it.
Thanks, Ross.